you have now received your mortgage disclosures. So the super most important disclosure that you've received is your loan estimate. So your loan estimate is a federally mandated required document that you sign within 3 days of completing your complete mortgage application. So this document includes your name, the property address of the home you're purchasing, has your sale price. It includes the term of your loan, whether or not it's a fixed rate or an adjustable. It'll tell you your loan type, whether it's conventional, FHA, or VA, and it'll tell you whether or not your interest rate is locked. And then it tells you specifically what your loan amount is, your interest rate, what your monthly principal and interest number is. It will show your estimated escrow account, and your escrow account is going to include your property taxes and homeowners insurance, as well as possibly mortgage insurance, depending on the program. The first page also gives you an estimate of your total closing costs. And then it says this is the estimated cash to close. Super important number. That means that's the amount of money you need to bring to closing. Page 2 of your loan estimate is going to show the details of that closing costs number on page 1. So section A is going to show if you have administration fees, processing fees, any underwriting fees. It'll also tell you if you're paying any points. Points are prepaid interest. If you pay points when you get a mortgage, it lowers the interest rate for the life of the loan. And 1 point is 1% of your loan amount. It's also, you'll also hear it called origination charges. So if you have any points, they'll be listed in that section as well. And then section B are services you cannot shop for. So these are things that your lender orders on your behalf. So your appraisal fee, credit report, if there is any upfront mortgage insurance premium, that will be disclosed in this section. And we also normally disclose a employment verification fee. Some companies require that we pay a fee to verify your employment. And then a lot of times you'll see a final inspection fee in the event that the appraisal comes back subject to any repairs to the property, which occasionally happens. Section C is going to show you the services that you can shop for. So you can shop for title insurance, which ensures you and the lender that there are no liens or judgments on the property. And the title company does a lot of things. They search the title. They also go over your closing documents with you the day that you settle. They notarize them. They wire money, disperse all the funds to everyone. So those are, you can choose the company that you want to use for that. And then the next section is going to show you recording fees, transfer taxes. When you buy or sell real estate in Pennsylvania, there is a 2% transfer tax. Normally, it's split 1% buyer, 1% seller, and that's percentage of the purchase price. So very seldom are the transfer taxes not split. If that number is higher, then that means that your specific transaction is requiring that you pay both transfer tax. But normally you'll see 1% in that for transfer taxes. And then the prepaid sections are setting up your escrow account so we can pay your taxes and insurance for you. It's also showing your homeowner's insurance premium, which you can shop for. And then prepaid interest, which means, so whatever month you go to closing on your loan, let's say you close in December, December 15th, you will pay interest on your money from the 15th through the 31st, which is 16 days. And then your first mortgage payment would be due in February. And then as you go to the bottom, it shows the summary of total closing costs and then any credits that you have. So if there are seller credits, meaning the seller's helping you pay a certain percentage of the sale price towards your closing costs, any deposit you made on the property, sometimes you'll see that deducted in this section as well. And then again, showing that estimated cash to close number, which is what you would need to bring to the table after your credits. Page 3 of your loan estimate, this document is going to show you who your lender is, and it's also going to show who your loan officer is, what their license numbers are. It's going to show you the phone number and the email address for your specific loan officer and lender. And then it's going to show you comparisons of the total amount of principal, interest, mortgage insurance, and loan costs that you're paying in the first 5 years. And then it shows you in the first 5 years what principal you will have paid off. And then it's going to show you your annual percentage rate. So this is the government's way of explaining your loan to you. It's not your interest rate. The interest rate is what your amortized payment is based on. The annual percentage rate is your costs over the loan term expressed as an interest rate. So it looks higher because of the fees that you're paying. Some of those fees are figured into this annual percentage rate. And then your total interest percentage, that's the total amount of interest that you will pay over the loan term as a percentage of your loan amount. So that's a little disturbing. Don't spend too much time on that. You really can't change it. And then other considerations, it's going to talk to you about the appraisal, how that whole process works, and that you do receive a copy of the appraisal. And then the assumption, it'll tell you whether or not your loan is assumable. So some mortgages, some loan types are assumable and some are not. And then homeowners insurance, you have to choose who you want to get your homeowners insurance through. It talks to you about late payments. So I mentioned earlier, if your payment's due on the 1st of February, you have 15 days to make that payment. If you pay it after the 15th, then you get charged a late fee. And that late fee percentage amount depends on the mortgage program. And then as far as refinancing, it just says, refinancing your loan will depend on on the financial situation in the future, the property value, and the market conditions. So depending on what's going on, you may or may not be able to refinance at some point in time. That really doesn't have anything to do with the type of loan you get in the beginning. And then it tells you whether or not your lender is going to, has intentions of selling your loan. So that means they transfer the servicing of your loan. So it doesn't change who you make, like the terms of your loan, the interest rate, the monthly principal and interest payment, but it might change who you write your monthly check out to. So if it says that they do intend to transfer the servicing, what that means is then you would get, after closing, you would at some point, if they do that, you would get a letter from the current servicer that says, we have sold your loan to so-and-so servicing company, and then you get a letter from the new company that says, hi, we are the new servicer of your loan. And then you have to confirm the receipt by signing and dating this document. So that is your loan estimate. That is explaining to you in the beginning the specifics of what you have applied for.